Hello everyone and welcome to this video where we'll be discussing what's been happening with the Swiss banking giant Credit Suisse, and what impact it might have on the entire financial system. Over the past year, Credit Suisse has been in the news for all the wrong reasons. The bank has been rocked by a number of scandals, including the collapse of Greensill Capital and the Archegos Capital Management fiasco, which resulted in billions of dollars in losses for the bank. These events have caused a great deal of concern among investors and regulators, and have led to a significant drop in the bank's share price. So, what's been going on, and what does it mean for the financial system as a whole? Let's start with the collapse of Greensill Capital. Credit Suisse was one of the main backers of Greensill, which was a financial technology company that specialized in supply chain finance. However, in March 2021, it emerged that Greensill had filed for insolvency, leaving Credit Suisse with billions of dollars in losses. The bank has faced criticism for being too heavily invested in risky assets, and for not doing enough to mitigate the risks associated with its investments. Then there's the Archegos Capital Management scandal. Archegos was a family office run by hedge fund manager Bill Huang, and Credit Suisse was one of several banks that provided financing to the firm. However, in March 2021, it emerged that Archegos had failed to meet its margin calls, resulting in massive losses for Credit Suisse and other banks. Again, this has raised concerns about the risk management practices at Credit Suisse, and has highlighted the dangers of banks providing large amounts of leverage to clients without adequate safeguards in place. So, what does all this mean for the financial system as a whole? Well, the collapse of Credit Suisse could have far-reaching consequences, both in Switzerland and beyond. The bank is one of the largest and most important financial institutions in the country, and its failure could have a significant impact on the wider Swiss economy. In addition, the collapse of Credit Suisse could also have a knock-on effect on other banks and financial institutions around the world. The interconnected nature of the financial system means that problems at one institution can quickly spread to others, potentially leading to a wider crisis. Of course, it's important to remember that Credit Suisse is not the only bank that has faced problems in recent years. The 2008 financial crisis highlighted the dangers of an over-reliance on risky investments and inadequate risk management practices, and many banks have since taken steps to address these issues. However, the events of the past year have shown that there is still work to be done to ensure that the financial system is resilient and able to withstand shocks. It's essential that banks and regulators continue to prioritize risk management and take steps to address systemic risks. So, there you have it, an overview of what's been happening with Credit Suisse, and what it might mean for the financial system as a whole. It's clear that there are still challenges ahead, but with the right approach and a commitment to transparency and accountability, we can work towards a safer and more stable financial system. Thank you for watching, and I'll see you in the next video.